Vikas Khemani joining us this morning. Vikas, founder and CIO of Carnelian Asset Management. Vikas, it's been a good Diwali, so to speak, right? Because you've had 5 sessions of gains. Perhaps that's just an inkling or a suggestion that something could be worked out. Do you think that this is that one major overhang, and if it goes away, the focus goes back to the fundamentals, which in any case are strong?
Absolutely. I think I think this overhang of tariff talk was, in my opinion, receding and a lot more. It was far more, I think, worrisome probably in April and May, as that time there was a lot of uncertainty. But I think in the last couple of months, more and more indications are there towards it settling down. And I think it has to settle down, whatever the number is, whether it is 15% or 25%. I think industry markets need clarity. And let's make no mistake that the tariff is not on India. It's tariff is on US public. Right now, how much public US people can bear that, it's up to them, right? Eventually, no companies make that kind of profitability. This would have been passed on. So I think uncertainty was creating bit of a worry, and I think this should become more and more getting that we are getting closer to that. And as that happens, it will be fine. But I don't think Indian story is only about that. I think two quarters ago, there was a question mark about the earning growth, which I think is also receding. A lot of monetary policy actions have happened. So India's story is broadly intact. Of course, whatever risk comes from the global side, will have to withstand them as and when that happens. But generally speaking, I think India's story is very well in place. And, we've had conversation multiple times that, we will do very well over the next 12 months. In my opinion, earnings will grow at 15, 16%, and markets can give 15, 18% return over the next 12 months, which is what I think, in my opinion, is great outcome in these kind of situations.
Vikas, good morning, Neeraj here. And just trying to understand how constructive would you be for the short term if we indeed see a deal reached one way or the other by the end of November, even if not immediately? Is that a further catalyst to the market, or is that optimism now baked in and the markets will move to what earnings growth delivery and the other benefits from consumption come about?
So I think it might impact some section of these sectors and companies which it got impacted, and those kind of companies might do well. Some segments specifically, which are exposed to, whether it is apparels or chemicals or there are a lot of some. But I don't think it's it's going to move the needle for overall market. Of course, whenever market any big uncertainty gets over, it has a positive rub-off effect. Bit of currency worry can settle down. So directionally speaking, it's not a game-changing event, but I think for some segments it will be very good. But India's story will continue to do well. And, in the shorter term also, we've been very, very positive for the simple reason, not because of the only US trade, but also there's a lot of shorts sitting in the market that will cover, a lot of cash sitting on the market. Those will kind of, be prompted to kind of cover the shorts and deploy cash. That will lead to the short-term rally.
Agreed. Because just one larger point, you've been very vocal and very constructive of all the actions that the Reserve Bank of India has taken, and then on back of that, this GST boost. Do you think for the next 24 months, both of these actions taken in this calendar year will show up in 2026 and 27 in terms of earnings and GDP growth, and will that propel markets?
Absolutely, Neeraj. Whenever any big policy, pivot happens, it always impacts with the leg. Like last year, earnings slowdown happened with the policy, impact, right? And today, RBI is giving very clear message through action, through, their all policies that they mean growth. And look at, India's credit, when world is struggling with the excess credit, but India's credit cycle is not even picked up. So we have a far more leverage on our credit side, on our balance sheet, which we can use for the growth. And RBI is just kind of pushing that to happen. At the same time, government is pushing, because they have fiscal space, they are pushing towards, consumption. They are pushing towards the growth, which they could do either in form of extra investments in the manufacturing or in infrastructure or consumption. So when you have government and policy, our monetary policy, both are supportive of growth, there's no reason why it will not happen. Of course, there could be some risk which can come from global factors, but fortunately, India's structural macro has been structurally repaired. So it won't be like lethal. It will not be, it can be a little bit of corrective phase if something were to that happen. But India's story, in my opinion, growth will continue to remain.
Got it. Gentlemen, thank you so much for joining in, both of you, this early in the morning. And to all of you, a very happy new Samvat 2082. But thanks for the conversation today.